Hello, hello, hello. Welcome back. We are live this afternoon and we are picking back up with our discussions on credit. And as promised, it's a 44-page document I'm going through, and I'm going to share that with you all so that you have all this information in writing as well. But it's also fun to talk about it, and a lot of people don't want to read 44 pages and would rather be laying in bed with the earbuds in and have someone just talk to them about it. Maybe someone with a soothing voice. I think my voice is soothing. What do you think? Well, anyway, all right, so diving right back in, what is a credit report? So a credit report basically summarizes your history. How do you make payments? Are they made on time? How do you utilize revolving accounts, meaning how much do you have as a limit versus how much you charge up of those limits? How often that you pay those things off? The debt that you have today, the credit accounts that you've opened in the past, how many accounts that you have open and active and positive. We call those trade lines. Some of the things that could surface as issues would be things like loan defaults or car repossessions or home foreclosures or bankruptcy filings or collections, things like that. Now, the credit report, I'm going to go through, there's basically 4 sections. You've got your personal information, which is name, birthday, social, current addresses, past addresses, and employers. So when you're applying for a mortgage loan, we are looking at those addresses and those employers, and we want to make sure they match up with the application, and therefore you might be asked about that. And if you're like, well, how'd they know about Big Bubba's camping store that I used to work at? Well, because it's probably on your credit report. So you want to make sure you put everything detailed on your loan application covering the last 2 years. The second thing on the credit is your accounts, basically. Your credit cards, your mortgages, your auto loans, your student loans, credit cards, and those different things. The third thing would be your inquiries. Now that's the records of the names of companies you've requested your credit report in connection with credit application for permissible purposes. Talks about, it didn't talk about, but it shows the dates that those inquiries were made. And with Experian, the inquiries remain on the report for 2 years. Most credit scoring systems don't consider them after 1 year. So checking your own credit, just so you know, does not affect your score. So check your own credit as much as you want. The fourth piece is public records. Now, what we're talking about more specifically is like a Chapter 7 or a 13 bankruptcy. According to this guide, the 7 will remain on your credit report for 10 years, and the 13 will remain on there for 7. Now, what's not in a credit report, things like race, ethnicity, marital status, income, medical history, purchase history, bank balances. A lot of people think that we might see what's in your bank, but no, that's not there. Criminal records and level of education. So I bet you're wondering, where does all this come from? Well, Experian maintains credit reports for over 220 million people. Yes, it's crazy. 220 million people Experian maintains credit reports for. And where do they get the information? Well, lenders, collection agencies, and other companies that do business, they voluntarily supply credit history information to the national credit bureaus. There's 3 of them: Equifax, Experian, and TransUnion. Creditors and other companies are not required by law to report the borrower data to the credit bureaus every month, but most do anyway because it helps them make smart lending decisions. All right, now here's a big thing. We're going to talk about credit scores, okay? So in a nutshell, a credit score is a 3-digit number that most commonly ranges from 300 to 850. Lenders use this to help access your credit worthiness. Higher credit scores mean you are more likely to repay the loan, and you can probably get a better interest rate because of those higher credit scores. Higher is better. The higher your credit score, the more likely you are to receive better terms on a loan, lower interest rates, and things like that as well. Higher credit scores can also qualify you for the best deals, not only on credit cards, home loans, but also personal loans as well. Now, how's that credit score used? Credit scores are widely used to first determine credit worthiness. Your credit is also used to determine which loans, including interest rates and fees, that you were offered via direct mail. Those instant approvals that aren't really true qualifications, they are just like, hey, you might approve for this, so apply with us and check that out. Now, who can see your credit? In the United States, access to credit scores and to the credit reports with which they are based is subject to strict usage restrictions under federal law. The Fair Credit Reporting Act limits access to your credit reports to a small number of entities and organizations, including lenders, insurance companies, and landlords, with your permission only. That is with your permission. They can't just go and get it, okay? Here's a myth that they want to reference. Only people with ultra-high incomes get exceptional credit scores. That is a myth. Now, what is the truth to that? Anyone who's managed their finances well can achieve a high score. To develop high credit, it takes patience, absolutely, discipline, absolutely, and wise decision making. Some people mistakenly assume the financial freedom, flexibility, and low interest and rich rewards you get with high credit scores are all reserved for the super wealthy, but that is not so at all. While a high income can make it easier for you to avoid a late bill, a late payment, a late fee, it can also help you avoid high credit card balances. Wealth does not guarantee financial management habits. And those habits are things that reveal themselves on the credit reports and therefore the scores that they are derived from. Now, here's the most important thing. Oh my gosh, like we've still got a lot to go. We're going to do this in a few different episodes because I know everyone's busy and you don't want to be on here with me too long, but how to achieve a high credit score. That is what everybody wants to know, and it's kind of hard and elusive to really figure out how to do that. I mean, there's some videos, there's some articles, but it can definitely be overwhelming. And so I'm really excited to share with you how to achieve a high credit score. Number one, borrow only what you need and only when you need it. Number two, and this is just as equally as important, pay your bills on time. What does that mean? Not 30 days late. You know, if it's due on the 1st and you pay it on the 10th, you might have a late fee, but you don't have a late reported to the bureau. Lates are reported after 30 days, so that 31st day, you would be deemed late. Keep your credit card balances low, below 30% of the borrowing limit, and try to stay below 10% or pay off your balances in full each month if you want to see the biggest improvement in your FICO. I'm going to say that again. There's a lot of confusion around this. Keep your credit card balances below 30% of the borrowing limit. So $299 on a $1,000 limit. You don't want to exceed it. And try to stay below 10%. 10% instead of 30, or pay your balances off in full each month if you want to see the biggest improvement of your FICO score or in your FICO score. The next thing is you want to stay consistent over the long haul. Your score will tend to increase over time as you demonstrate long-term financial discipline. What a credit score won't do for you, or what a good credit score won't do for you, is even a perfect FICO of an 850. It's not going to qualify you for a loan that you can't possibly afford. Before you can finance a personal jet, oh, I'd love one. For instance, the lender will want to see evidence of income, savings, ability to repay, budgeting for the monthly payments, and things like that. A great credit score is possible for anyone. Anyone. And having one makes easier and more affordable to finance purchase within your means and what you can afford based on your bracketed income. So how are credit scores calculated? And I'm gonna elaborate a little bit. Don't let things go into collections. Definitely don't do that. Like I said, don't pay the bills late. Make sure that is one of the biggest things that I see that can cause problems for people. Now, how are credit scores calculated? The computer algorithms called credit scoring models assign credit scores using complex statistical analysis that predict your likelihood on defaulting on your loans, meaning being 90 days or more late. These models look for combinations of data in your credit report that historically have been associated with payment defaults across large consumer populations and assign scores based on their prevalence or absence in your credit history. There are hundreds of different, I didn't even realize there were hundreds, actually. I knew there was a lot, but I didn't know there were hundreds of different credit scoring models available. Each differs somewhat in the way it calculates your score, and the specific math that each one uses to keep is basically kept secret. That way no one can kind of game the system or kind of gamble with the system. And the other thing that I think is really important too is, you know, a credit score and a credit report, like it basically doesn't exist until you ask for it, right? So it's like a Polaroid picture. I want my credit, boom, Polaroid, balances, history, trade lines, positive versus negative, credit utilization, and multiple other things. And it zaps a score right in there based on that and based on the models. And so if you just pay down a credit card that doesn't reflect, well, that score would be different, right? So it's not just like sitting there all the time. It's available for when it needs to be pulled for a certain reason, and then it is that snapshot that can be used at that particular time. Now, what do these scores mean? We talked about 300 to 850, and lenders, like we said, have access to hundreds of credit scoring tools, including some they build and use themselves. Some are custom designed for particular industries such as auto financing or credit card lending, while others are considered generic and applicable to a wide range of lending applications. Genetic scoring models all calculate scores based on the contents of your report from the 3 national bureaus. Each model differs slightly in the way that it calculates scores, and some also differ significantly in the ranges of possible scores they generate. For instance, the FICO score used by most lenders in the US range from 300 to 850, and competing Vantage score 3.0 and 4.0 models produce scores in that same range. A lot of times when you're getting these free credit scores and these free apps, they're giving you a Vantage score, which is not what a mortgage lender is going to use. That is why the score comes out differently when you're looking at it versus what the lender actually pulls for you and gives it to you. And you're like, oh my God, why is my score different? Oh my God, it dropped because you pulled my credit. No, that is not what happened. So by contrast, the original Vantage score models 1 and 2 generate scores in the range of 501 to 990. So you could apply different models to the contents of your credit at the same instant in time, and you would definitely see different results based on what the models are used. And that's exactly why you're looking at an app and you might see one score and you go to apply for a mortgage and you're going to see a total different score. So while you may see some different scores in different places, federal law requires certain actions when these scores are used in credit decisions. So for example, if a lender tells you that they've had to turn down your loan and they talk about the different risk factors, then they have to provide to you in writing why they turned down your loan. And that way you can use that to go and say, hey, I need a free credit report because I've been denied credit. I need to make sure things are accurate. And it also gives you the information to know, like, hey, my budget's too high. I need to work on that. I haven't been on my job long enough. I need to work on that. I don't have enough money saved. I need to work on that. So it's like a little roadmap that you can follow. So the next thing we're going to pick up with, and I'm going to leave you with another little cliffhanger. We're about halfway through the document and it's such good information. So please like it, share it, subscribe to the channel, share it with your friends. I'm so excited because this is some of the most accurate information and detailed information I have found in this document. And that makes me so excited because it can be overwhelming. So where we're going to leave off now, we're officially on page 22, and it's going to be 5 factors determining your credit score. And so that's where we're going to pick up next time. Again, be sure to like, subscribe, and share. And I really, really appreciate you tuning in. I hope you're finding value, and I look to, it's a great pleasure having you here. I look forward to seeing you in the next one.